The first stage of funding a new company comes so early in the process, it is not generally included among the rounds of funding at all. Known as the pre-seed funding phase, this stage typically refers to the period in which a company's founders are first getting their operations off the ground. Typically, they use their own funds to do so. The next phase is the seed phase, or the pre-commercialization stage, of any company. It is the proof of concept stage in which a business idea is tested for its viability. At this stage, the basic research may have been completed, but the commercial capabilities are not yet proven. Seeding is the first official money that a business venture or enterprise raises. You can think of the seed funding as part of an analogy for planting a tree. This early financial support is ideally the seed which will help the business to grow. When you hear discussions of Series A, Series B and Series C funding phases, these terms are referring to the series of funding rounds that can provide outside investors the opportunity to invest in a growing company. They do this in exchange for equity or partial ownership of the growing company. Typically, a Series A round will raise between $2 to $20 million for the company to grow their operations, and in 2020, the average Series A funding for new companies was $15 million. The Series B funding phase is used to grow the company and to build a winning product. Bulking up on business development, sales, advertising, tech support, and talented employees is expensive, and companies undergoing a Series B funding round are well established, with strong reputations and revenue valuations between $30 to $60 million. In 2020, the average amount such companies raised in their Series B funding rounds was $58 million. If a company reaches a Series C funding phase, it has likely already shown unprecedented success when it comes to selling its products. As the operation gets less risky, more investors want in, and groups such as hedge funds, investment banks, private equity, and large secondary market firms all bid to invest in the company. Series C worthy companies enjoy an average valuation of $118 million, although many are much higher. It's expected that companies entering the Series C funding phase are laying the groundwork for a future IPO.